What's up, YouTube? It's your girl, RomY. It's been a while. I'm hoping everyone is doing well. Let me do a little bit of housekeeping and we'll get started. First off, I'm not a financial advisor and this isn't financial advice. If you like the video, give it a quick thumbs up. Don't forget to hit subscribe. If this is your first time here, welcome. I also provided a link below so that you can avail yourself to some free stocks. So without further ado, let's get started. So what is going on? It's been 2 weeks since we last met. We have a new president, a little stability in the market, not these wild swings. I gotta say I'm pretty happy about that. So I promised that we take a look into the small account. So let's get into the small account. So as you can see, I have $534.17 because I added another $250, bringing my total credit into the account up to $500. So as you can see, I'm up about $34, which is roughly 7%. We started off with $250, but then I deposited another $250 this month as part of like a reoccurring investment strategy so that I can increase some of my position size and also to diversify my portfolio. Also, let's look at the dividends, right? So you can see the list of stocks that I purchased and dividends that they're paying: AbbVie, PFLT, PSEC, STAG, MIC, PFLT again, and GLAD. I want to touch on MIC really quickly because MIC paid a one-time special dividend of $10 a share. So whenever a company pays out a dividend, it decreases by that dollar amount as well. So if it was trading at 30, it's going to start trading at 20 when they pay out the dividend. So that's why MIC is taking such a beating, because they just paid out $10 per share for their dividend. So if you got in at 20, no big deal because it ran up to 30. Whatever the case may be. So I'm going to sit still in this trade and wait for it to go back up to 30, right? And also collect the dividend during the next extended dividend pay. Let's get into tickers. So the first one I want to talk about is LUV in the industrial space, and that's the ticker for Southwest Airlines. So why LUV? So Southwest for me is better positioned than any other major airline, given its lower cost structure, limited debt, leisure travel focus, domestic bias, their fleet simplicity, and their brand. So, but also remember that the business travel hasn't come back and won't return just yet. And that's what all the major airlines are banking on. So in the meantime, we're going to keep this on our radar and on our watch list. So in the short term, Southwest looks like a sell, but in the long term, and if you're already in the trade, you should hold on to this. Right now, Southwest is currently trading at $47.39. It has some resistance to break at around $47.65 approximately. They also report on January 28th, so I'm going to keep a close eye on that. Should it drop down to support at around $46.75, I'll start to nibble. My price target is $52.50. This is part of my February into March setup. Just like KEX and TJX was part of a setup for February into March. The second sector I want to explore is financials with the ticker BAC, which stands for Bank of America. So Bank of America is currently trading at $31.55. It's bounced back significantly from its March lows. However, I think there's still some upside. My price target is $34, but this is an investment. So I might shave some and keep some because it also pays a dividend. And you know, I love a dividend. However, I want you to do your homework. So I want you to look at some of the pressures that are affecting it, like their net interest income, and look up their provisional profit before tax and the stabilization of that. Look up their loan balance and credit losses. So familiarize yourself with these items that will either impact or inform your decision to enter a trade, right? So there's support at these three levels: 31.29, 30.48, and 29.26. I'm going to start accumulating shares at the support levels. And my stop loss is 29.05, which is roughly less 5%. How did I know 5% is going to be 29.05? It's real quick, easy math. You take the three support levels, you divide it by 3, and then minus 5%. Now, let's dive into healthcare, the ticker MDT, which stands for Medtronic. Let's not get too deep into our feelings with the price of Medtronics. Because remember, if you're utilizing the RH platform, you have the ability to buy fractional shares, right? So you can buy like $50 worth of Medtronics. And if you're doing something like dollar cost averaging, you can buy a full share later on, or more fractional shares when there's a down day or a red day. And once we start building this really sound revenue generating portfolio, we can then discuss options to back up some of the investments that you've made. But I don't want to touch options just yet until we have a portfolio that's really banking, where we can use that income and any profits to purchase options. So I don't want you to continually be putting money into the account aside from whatever you're using to do your dollar cost averaging. So back to Medtronic. So Medtronic develops, manufactures, distributes, and sells device-based medical therapies to hospitals, physicians, clinicians, and patients worldwide. It operates 4 segments, and it's cardiac and vascular group, minimally invasive therapies group, restorative therapies group, and a diabetes group. And in the last decade, their revenue has doubled. But as always, there are support levels, and we always want to stick to the basics. Let's look at the support levels. So Medtronic is currently trading at $116.58, with a resistance of $117.35 that they need to break. So there are 3 support levels that I'm keeping an eye on, which is 116.15, 115.75, and 114.95. And I have a stop level there of 111.24. I also kind of cleaned up the chart where I don't have so many moving averages or candles, so that you get a clearer picture of the support levels. But feel free to go on Thinkorswim and look at the charts. Really quickly, I want to go back to Bank of America because I realized I left some important things out when we were looking at the chart before. So Bank of America has a gap lower, and that's an area where it was consolidating and building a real base. So if you should see Bank of America drop below that 29.96 level, that lower support, know that it's going to start that consolidation phase all over again. That is the lowest of support. And if it should fail that 29, then you would get out of the trade. Also, look at the RSI. It was verging on the point of being overbought, right? And that's pretty much all I wanted to alert you to. So that's all I got this week for you guys. I hope everything is going well. Also, we have mega earnings next week. We have all the big names reporting. Can't wait. It's going to be exciting as ever. All right. If you like the video, give it a quick thumbs up. Again, if this is your first time here, welcome. Don't forget to hit subscribe. I've also included a link below so that you can avail yourself to some free stocks. And again, when they ask you why it's so easy, tell them RomY taught me. Till next time, YouTube. Peace.